double record it. So in case one of them doesn't come out, we'll be all set. The problem is,
Recording in progress.
there you go, the one from Zoom doesn't record in 4K. All right, it's Jeff Scott. You all know that because you're here for this. And this is my second virtual stock club. I had a lot of very positive feedback about the last one that we did. And I got to thinking about what is it that I haven't done in a long time. And one of the things that I haven't done in a long time is do a live meeting. And one of the first things I do at the live meeting is I kind of review the signals that I like to use, why I use them, and then some of the chart patterns I look for. So I thought what I would do today is the opposite of what I do on Sunday. Sunday is heavily top-down driven. And the reason for that is I'm a big believer that as Ian taught, half of what happens tomorrow is going to be based upon the market. Maybe 30%, 20 to 30% is going to be the industry group, and 20 to 30% might be the stock. And when we do our Sunday reviews, we look at the market first. I look at industry groups, and then I try and find to purchase stocks in the top 10 industry groups that are performing better than the industry. I also do bottoms up, and that's where my scanning, the radar screen, market watch, and some of the tools in HGSI come in. So I thought I would make today about the signals and the patterns. And for those who are new to what I do, you'll learn what the little greens and blues and reds actually mean. And for those who used to go to the Ian meetings, and I can see several of you here, maybe it'll be a review or boring, one or the other. So as always, I'm happy to respond to emails. Things that I can share, I respond to if I can or I can't. I don't ever share anything that's proprietary. Most of the stuff in HGSI I've already put in there, or I have to update what I have. This is for education purposes only. I'm a doctor, not a broker. I'm independent. I paid for the tools, and options are something that people consider risky, and you should only trade them with if you know what you're doing, and should not be traded without a strong foundation. And the Options Industry Council has a bunch of material because there's always a chance I'll cross over into the options world. I'm updating HGSI, but the minute it gets done, I really wanted to start. Is it done yet? Let's see. Nope, it's still running. I really wanted to, nope. First I wanted to do, before I even start with the PowerPoint, for those that were here last time, we went through and I wanted to build what Ian used to call the E-index. And as we reviewed last time, the E-index is a list of stocks, and typically we're not supposed to have any more than 2 per industry group, and that we use this as an early warning signal, meaning if a market's going to roll over, it's the leaders in the market that often roll over first. And so it was actually a lot of fun for me because during the meeting, I let you all throw out stock names and I commented on them. And then after the meeting, I asked people to send me some of their picks. And it's a month old, but so far, we'll concentrate on the recent time. So far, it's really served its role because as I said when we did this, I don't build this as a buy watch list. Most of the stocks in the list by definition are extended. Well, they're a lot less extended now because there's been earnings have come out. But the real reason I do that is I found out over the years, Ian's a smart man, or was a very smart man. And if I break down below the 50, this index is broken. But notice how even with the weakness that we had, I know that I had the weakest day in 3 years, if not longer, on Wednesday last week. Yet when I ran the index on Wednesday night, I was like, wow, we didn't even break the 17-day and we finished well off the lows. That was enough to say, I'm going to stay with it. And what happened on Thursday, I had my best day in 3 years. And turned out I ended up just kind of like, similar. Yeah, actually, I was probably closer to break even over these 2 days from where the close was on Tuesday. And what's happened since? We've now gone back up above the 8-day exponential. So if I look at the Keepers Index, what it tells me is it's okay to be in this market still, that even though there's been really massive rotation, painful rotation at times, that things are holding up okay, at least the leaders are holding up. And so I maintain my positions. Now, it doesn't tell me to go out and buy the leaders index stocks because I may not want to buy things that are extended, and that was part of the definition. Now, during the work we did last time, there were several really good stocks that were presented, and I said no. And I said no because I wasn't looking for the best stock to buy right now. These may be the best stocks to buy right now. I was looking for stocks that were leaders and leaders that were extended. So I would say the index that you helped me build is doing exactly what we would want. And frankly, if this was a stock that ran up, pulled back, got some very low volume days here as it's sort of resetting, I might look for this to break out to go higher. So that's how I use that. And to me, that's why I wanted to do that. And I did send out the HGF file to import into HGSI. And since I'll have a recording, in case you didn't have it, you can always pause and look at what these stocks are. Some of these are still doing great, like DigitalOcean, which was one that we included in the index. This one actually had, I think, a secondary, and it just blew right through it. And some, like my old favorite Generac, have stumbled after earnings. So the point of the index is not everybody acts the same way. And just like the market, you'll have winners and losers. Now, back to what I do and what I've learned and what I'm going to try and, I guess, teach today, although some of the people here know more than me, is how do I use all these tools to find stocks that I want to buy now? Now, last time TG talked about the Hgsi method. I use that. Sager's on. He's got some great tools. I use those. But I sort of made a decision that I'm only going to talk about things today that are, I'm only going to talk about signals that are free inside HGSI, meaning you buy HGSI, the signals are already there, or they're free in Thinkorswim. About the only one that is up here, Dr. K stuff, obviously it's a commercial entity, and he's supposed to speak tonight, and son has a wrestling match, and I told him that comes first. I also told him that I wrestled for 2 years and played basketball for 4, and my parents each came to 1 game in 6 years, so I'm sort of sensitive on that one. So I told him he needs to go. If he comes back, he'll speak. I'm not going to talk about things you got to pay extra for because, except for the person add-on at HGSI, because I can do much of what I do with these tools. Now, do I use Q? Absolutely, and I'll probably show you some of that in TradeStation. My biggest issue with Q is it's not in HGSI. And maybe one day I can sit down on the phone with Sagar and show him some of the things that I think are my favorites and figure out whether or not the data source of HGSI is enough to make a skinny package. Dr. K, we've looked at putting in an HGSI, but as I mentioned last time, after the initial one, some of the heat, I sort of backed off. Now, anybody that's watched me for some length of time knows I live with one trade over and over and over and over and over and over again. And that one trade I look for is a pullback in an uptrend. And I don't have to make any other trades. I can get market beating performance year in, year out a combination money management and what I trade, but I trade the same thing over and over and over again. So I'm going to talk about that tonight and how I use these tools, what the tools mean and how I get there. So I'm going to talk a lot about this pullback to support trade, and then I'm going to show you some of the scans at HGSI that I built to find these stocks. On the change in direction, I'll mention Divergence. The PMC tools, I believe, free in Thinkorswim. It's a add-on in HGSI. The HCD and LCD is not in Thinkorswim. It's part of the add-on in HGSI or TradeStation. Those are two things that really help me out, and I'm going to show you the weekly HCD of why it's, to me, it's such a great tool. And oh, by the way, you can look at a chart and see an HCD. I mean, when I hang out with John and we look at charts, he doesn't need to have the signal painted on the chart. I think it's the first thing he looks for, high closed dojis, and I'll define those. And then I'm going to review some of the momentum indicators that I use. So I'm going to go over all of this. Type your questions as we go, and I'm going to try and take us over the next hour from these green and blue and red lines and dots into finding trades. You know, I could probably live today with just a price and volume chart with no signals on it. I really could. But I could use these signals to help me narrow the 11,000 instruments in HGSI to 30 or 40 to look at. So let's just review these. This is going to be kind of rapid fire. I will send everybody a link to this PowerPoint if you don't already have it. And this is being recorded. I will, all right, so, and actually let me just address that right now. Great question, Mike. That's a hint of what I'm going to show you about wealth charts and a comment about wealth charts. So, I don't have a mailing list. I will place this on YouTube. I probably won't place it on the HGSI board. I'll have to see how it comes out. And that's for the simple reason I'm not limiting today's talk by any means to HGSI. I'll talk a lot about HGSI because that's what I use. Under community, there's this thing here called Community Forum. Again, I haven't signed in or anything. You want to join this community forum, and it says, how do I sign up? Why do you want to join this? Well, I wish I could say because hundreds of smart people are posting every day, but that would be a lie. You want to sign up because Mike Scott and a few others will post occasionally, but you really want to sign up because that's where I send out an email with links to my recordings and my PDFs. And if I ever don't put something on YouTube because I don't want to upset anybody, you might want to look there. So Hindenburg omens, I talk about them every week. Hindenburg omens, I'm not even going to talk about the math in the slide. You can read that yourself. A Hindenburg omen to me is the signal where the market is probably getting close to a short or long-term top. It's when the smart guys are saying, let's raise cash. And the people like us, we're not the smart guys, are saying, I've missed this run. I got to get in. I got to get in. So you see volume, you see new highs, new lows, big days up, big days down. And the Hindenburg omens often signal a correction. 1 out of 4 is a big deal. And the, you know, if I see multiple in a row, I get concerned. Typically, this should be done on the NYSE. In Edge Radar, you could also do it on the NASDAQ. I just don't know what the NASDAQ one means, but I find that this is a great heads up to something bad's going to happen in the market or might, and it's usually enough of a reason for me to think about, you know, protecting myself. It's all it is. It's a warning signal for a market top. The high jump bar works on stocks, and it works on indexes, sectors, everything. Now, maybe 2 weeks ago on my Sunday review, this is the Sunday before the massive bad Wednesday for me, I went into this chart, I looked at the NASDAQ, and I said, wow, look at this, we're above this dashed line. So we ultimately went to 100% on the 4th. So that would have been Thursday, if my math is correct. On Friday, which was the last day before I spoke, we already come off to 98. And the comments that I made was, when you get above this white line, you have the most extension from the moving averages going back, and I look at 200 bars. This is when markets reverse. And hey, it works every time. So you go back and look at the video. The high jump is a simple math. I learned this from Ian. Again, I love that old man. He was great. He was wonderful to talk to. He was a great teacher. His voice was mesmerizing with his accent. And whenever you see a white slide with these three colors, this is an Ian slide, and he gave me permission to use them. In fact, my son actually spent some time with him near the end and is supposed to write a book, but my son is a millennial. I don't need to say anything else. If you take where you are in price and you look at the difference from the 17, the difference from the 50, and the difference from the 200, you could add them up, and you got to be careful of plus and minus. If you're below the 50, then it's a minus number. If you're above, it's a positive. And you can add those three numbers together. And then I just look at where are you going back a year compared to the highest number up or highest number down. And when you've got the highest number in a year, you're extended, and that's the high jump bar. And when you got the lowest number of the year, you're extended to the downside, and that's the low jump bar. The actual number is irrelevant. It's really what percentage of you of the highest or the lowest. This thing will say bacon. I don't buy stocks when the high jump bar is above 95% because there's just not that much room left. And I'm careful in the market, just as I pointed out. I use closing price. If there's a high jump available for toss, I think Bob made me one of those. I have to go back and look. It's simple math. It's not a hard indicator to make. It's really, just think about it. Everybody says this market is extended. Well, what the heck does that even mean? I like math. This is reproducible math when the market is extended. A question came in, do I use John's indicators in HGSI? Absolutely. I'll show you when we get there. Two things on the Eureka and the Phoenix. I couldn't tell you what the numbers are without looking at this if I had to, because why? I don't care. Green is good, red is bad. Blue is good, red is bad. But I need to know what it means. So the Eureka is sort of the HGSI Ian follow-through day. It's calculated on the NYSE. I've learned over the years that it's meaningful to me on the NASDAQ as well. When I get a Eureka signal, and you could see the definition, uses arms, trends, advances, declining ratios, volume, so on and so forth. When you get one, it's a very bullish day, somewhat analogous to a William O'Neill follow-through day, although it's a different way of calculating it. If I've had a market that's been trashed, and I'll talk about the bingo in a few minutes, when I see a Eureka, that tells me the internals are getting ready for the market to turn around. Now, those that have been doing this for a while, I think it was Alan Greenspan that gave the term emotional exuberance or irrational exuberance. If we had a Eureka tomorrow after the run that we've had, that would tell me it's time to get out of the market. Why? Because it would mean it's kind of when the melt up occurs, that when you start seeing Eurekas after a big run up, it's telling you there's a rational exuberance. So these are plotted on HGSI and can be plotted on anything. It's purely math. Phoenix is the opposite of a Eureka. O'Neill doesn't really have a follow-through day to the downside, but he does have all kinds of sell signals. Well, the Phoenix is the opposite of the Eureka. The market's had a big run. You're going to have, we have up days and down days all the time. We don't have a lot of Phoenixes. If I see a Phoenix tomorrow, that's also a signal that tells me to be concerned about this market. Like the Eureka, it signals a market reversal is coming. It's really the internals of the market that are giving that signal. And again, you're just trying to get an edge. Now, the Phoenix and Eureka are part of my standard chart in Hgsi, and they're only calculated on the NASDAQ or the NYSE or both, because I run both on my charts. And I could change from Microsoft to AMD to gold ETF. They don't change because they're calculated only on the index. So these are great signals if you're looking for a market that's reversing. Bingo. I mean, he was into the bingo, bango, bongo. I can't remember what the bango is. I don't think I ever used it. The bingo is when people used to say, and I'm going to show all these on charts as we go. The bingo was the baby out with the bathwater day. The stock is just trashed, and selling begets selling. Selling caused margin calls, caused more selling. So it's when that stock, it's when you get, it's when the stupid money, dumb money, oh, we got to get out. And the smart money says, hey, this thing's now trashed. Now's the time to get in. So when you see a bingo signal, whether it's on the market or on the stock, it will tell you that you've had one of these horrendous days to the downside, either on the market or on your stock, depending on what you're looking at, and that this is part of that thing called capitulation. Now, unfortunately, it's not simple, and I have seen, a inch-long bingo signal, meaning 5 days in a row. So it's really tells you to look for the reversal. And what you really want to see, and I go back to March of 2009, and what I saw, I think that was the right date, was bingos followed by a Eureka, followed by kahunas on the markets. So the bingo is telling me the baby's out with the bathwater. We may not be done falling, but we're getting close. And that Eureka day says, sharpen the pencil, it's time to start thinking about entering. And everything here is calculated math. It's all put out here for you, or it's using traditional indicators. Now, I remember Ian asked, I called the Gang of Five, and several of them were on this call. And, if this bingo was great, for the markets, Eureka, the Phoenix, could we come up with something that might signal a trend change on stocks or on index groups or on the markets? And the five of us worked together. It was a lot of fun. It was also a long time ago. And we came up with something called the bongo. And so I talk about the bongo. The bongo's on the top of my chart. The bongo is a trend indicator. If it's green, you are in an uptrend. If it's red, you're in a downtrend. Simple as that. I have weekly on the charts. I used to have the daily, and I took it off because it was clutter. But let me just tell you about why I like this with the daily. I like pullbacks and uptrends. Pullbacks and uptrends. So that means I am looking for a weekly bongo that's green, because if I'm in a weekly uptrend, it's been more than a couple of days. Now, in a super strong market, I'm going to have a green daily, which is the bottom one. But when that bottom one went red, what does that tell me? It tells me my longer term signal is still in an uptrend, and my short term signal says I'm giving a pullback. I can actually scan for this in any platform, and I could do it at TradeStation, Thinkorswim. And what I really want to find is the weekly's green, and it's been green, say, for more than 3 weeks, and the daily turned green today and was red yesterday, because that's when you start to have the trend change on the short term. In Hgsi, you can look for how many days it's crossed over. It's actually very simple. It's hard-coded. And again, it's one of the reasons why, even with wealth charts and all the other things I own, I can never get rid of HGSI. Even if he put a 1 in front of the price, it's such a good deal. So bongos are helpful, and it's just part of the picture. Now my stock is in an uptrend, or if it's red, a downtrend. So let me just put up a chart for a second. And I'm just going to pick any of these. Let's pick, these are all leaders. I don't know how many things I'm going to find that looked ugly at a time, but I know which one did look ugly. I don't know if we picked it. Let's just look at you, for example. I listen to certain people. It's funny. My wife goes, "Why do you pay to listen to Jim Ropel when you do this and people listen to you? Isn't that silly?" And I thought about that, and she's right, except why would I ever want to stop learning? So he's been in love with Unity software, and it looks pretty good there, but you make it, I will go this way. Is it this good? I mean, it's been all over the place. But this can show you up here where my arrowhead is, that is my weekly bongo. So in this period of time, I was in a downtrend. Now, it called a change to an uptrend right here. Now, was it early? No, it wasn't early, but it kept you in. You had a period here where it showed out of a downtrend when it pulled back, and it went right back in, or out of an uptrend and then back into the uptrend. So if I was looking to go long a stock and I see that I have a red bongo, I have to convince myself that I'm not seeing a mirage on the short-term indicators, and I don't want to buy something in a long-term downtrend. But you could see this downtrend was over in this area, and it took a while to work for the weekly bongo to work out. So it's slow, but it keeps you in the majority of a move. So I find it useful to look at. Up here, that's interesting. These are the Hindis. Now I want to show you what I do on the Hindis, because I can guarantee you I will get emails tomorrow that their Hindenburg does not look like my Hindenburgs. In my chart view, you will see I have two different Hindenburg omens. Why? The first one, when I open that up, is on the Hgsi All NYSE Index. That was the classic way that we used to look for Hindenburg omens. Then George changed his data source, and I switched to bar chart market indexes, because it turns out they don't give you an exact match. Don't know why, don't care, don't want to explain it, but by putting both of them in the same basic window, whatever you want to call this, I don't care which is firing. If I see a Hindenburg, I pay attention to it. And, if you look at where we are in the market now, using this way, there was a Hindenburg back in late September, but we're out of that. And what happened to Unity? It sold off because the market sold off. So just while I'm sitting here on this chart, let me comment about a few other things. So remember, Hindenburg omen is only, Matty, you're a smart man, you saw that, I'm getting there. The Hindenburg omen is only calculated on the NYSE. If you want yours to look like mine, put both of the different indexes in. And again, you go into this here, which is edit chart view. You open up each of these, or I put two in there, and I have one's market index and one's the old way. Simple, simple. Here's my bongo weekly and daily. I'll often, because there's so much stuff on this chart, will close the daily up. I care more about the long-term bongo. Now we're going to skip everything else and come down here. As was noticed by one of you, I've got Eureka and Phoenix is here in the volume window, and then I've got the alt Eureka and Phoenix. So that was a good pickup. I got frustrated because my buddy Kathy, who, I don't know, she's on, she would call me up and say, Eureka Day, and I would look at my charts and go, I don't see a Eureka. Well, here's the deal. The Eureka and the Phoenix are the same. I can pick NASDAQ, NYSE, or Amex. I don't pick Amex. I don't bother with the Amex. So in one window, I've got the NASDAQ, and the other window, I have the NYSE. So why? Because I want to make sure I capture both and don't miss one. Now, the interesting thing here that I'm looking at, you see all these Eurekas occurring here, yet Unity software is selling off. That must be wrong. The answer is no. Remember, the Eureka and the Phoenix are calculated only on the NYSE or the NASDAQ. So when I see that, I suspect when I go back and look, the market was very strong during this time. I don't have one single Phoenix for a while, but Unity software was not participating with the market. So I have those on my charts. They're on pretty much every chart. The only thing that's different is I might shut off or skinny down the daily bongo. These names are legendary because they came from the man himself, Ian. And he would he'd be at the front of the room, dancing around, using his hands, everything to describe things. And so the big kahuna. Kahuna sounds like it's a big deal. And it's probably more common today than in the older times. I see more of them. But Ian found out, and let me take a step back. John Bollinger created Bollinger Bands. Most people would say that the Bollinger Bands, although very useful, are not a trading system. The Bollinger Bands have a lower one and a higher one. Many platforms will tell you what the %B is. I know that if someone says today's close of Microsoft was at a %B of 90 or 0.90, that would tell me Microsoft closed right up near the top. If it was 0.1, I would know it's at the bottom. If it was negative, I would know it's below the Bollinger Band. And if it was over 1, I would know it's above the Bollinger Band. We're not talking buckets today. That'll be another story. But that's sort of the derivation of the buckets. You take the 0 to 100, you make 10 layers. You have one below and one above for 12. And Sager actually put this in his Q-Edge tool so I can get this real time during the day. But the kahuna, thinking about %B, Ian found that if there's a 0.24 move in that Bollinger Band on a single day, that was meaningful. So a small kahuna, which is the lighter blue or the lighter red if it's down, is a %B change of 0.24. That means yesterday to today, it moved 24% of the width of the band. And a really big move is 40% or 0.40, which is the darker ones. It doesn't, that's all it means. And it says to me, something is going on with the stock. Obviously, seeing a lot of volume in a trading day is meaningful. Seeing a big price move is meaningful. Seeing a big % change B is meaningful as well. So all the kahuna is the percentage change, one day change of the %B. 0.24 to 0.4, that's a 16, doesn't count. 0.24 to 100, that's a 0.76, that's a big kahuna. That to me is just what it is. It's a sign of momentum, period. Momentum, all it means. And so I look for this as supporting information that something is going on and I should look at it. Now I'm going to mention force, but it's come off my charts. It came off my charts because it was sort of similar to how I used the bongo, and I ran out of real estate. So the definition of force index is right here. Today's volume times yesterday's close minus today's close, or today minus yesterday rather. And two things will drive the force. One is volume and one is change. I like using the force for momentum, and the higher the 2-day exponential, 5 or 13, whatever I'm looking at, would give me, I like to rank industry groups and then stocks as far as momentum. That's how I use the force. I think this is Sarkit did this. Yeah. Dr. Sarkit or John Sarkit came out with rules of how to use force for trading. I took it off my charts, but I use it to rank momentum. I still think it's important. And, you know, if I didn't have the bongo in a trading system, I could use the force index, the 2-day and the 13-day perhaps. And with the 13-day being like the bongo weekly and the 2-day or 5-day being the bongo daily, and looking for the weekly to be in an uptrend and the cycling back and forth of the daily. So that's the definition. It's sort of fallen out of my chart though. Bottle gap ups and pocket pivots. Again, you can read the definitions yourself. You'll be able to download this PowerPoint. In fact, well, it'll be out, it'll be posted tonight. I'll put it that way. I was gonna say I could do it during this, but I don't want to put any burden on me actually figuring what I'm doing and not messing up. But Bible gap ups, you see a big gap. Is it an exhaustion gap? Do you buy it? Do you chase it? The nice thing about Morales and Catcher, they define it. Things like, percentage of the 40-day average true range, the volume that has to occur, and they have stock after stock and research that supported why you buy these and where you put your stop. So Bible gap ups, again, you need to figure out what they are and understand, but it's a bullish thing. And pocket pivots, I've read all their books and I still subscribe to Gilmore's report and videos. Why, I don't know, because I've been doing this for so long, it's sort of second nature, but we're friends and I don't like to cancel friends stuff. Silly, probably. But again, here's his 10 commandments of pocket pivots. And, sometimes he's kind of anti-O'Neill and canceling. No, not sometimes, all the time. And he likes to talk about how pocket pivots is a signal that he came up with that's an earlier buy or add-on buy spot than what you see in O'Neill stuff by himself. And so he's tried to improve upon it. So let's go back into my chart. And we're going to go into more than charts in a little while. Let's open up Unity again, because I should probably just leave it open. So pretty strong stock right now. It wasn't for a long time. Ropel is a smart man. So remember, I got my Hindenburgs on the top. Now you might say, well, it looks different here. Yeah, it looks different here because I just scrunched it up and those other signals are probably over here to the left. So I've scrunched it up. You got my bongos. High jump. I think this is the new high jump. Let me make sure. I have a lot of different views and sometimes I mess them up. I tried to build a high jump, low jump indicator that is different than what Ian used to use. Yep. So the original high jump only looked at 0 to 100. And this is the new one. And I wanted something that could help me find stocks that it was time to buy. Like over here, at this point in time, Unity's low jump was at basically minus 100. It's flatline. And it had what's called a green candle low, which is a reversal signal. Well, that might have been interesting to know that. And then putting this on my watch list because this would have been a great day to buy it here a few other days later. But I might not have been looking at it at the time. So I think it's useful to give you a sense of overbought, underbought, oversold rather, and look for other things that can help you. Bible gap up, again, the definition is already there. Well, it would have been this stock here. So that meant here was the close. Here's the open. That must have been 75% of the 40-day ATR, and you must have had 150% of the 100-day volume or whatever it is. Now, you can't see it very well, but there's a huge volume bar there. So why bother worrying about the formula? Bible gap up's bullish. There are trading rules how to trade it. In fact, the stop on the Bible gap up probably would have been at the bottom where it opened, and you still haven't been stopped out. So there are rules to trade this, although in some minds you can look up here and say, well, you're extended now, I'm not going to trade it. I pay attention to high jump here where you've had a big run. I pay attention to low jump here because you've just come down a long way. I don't pay attention to a rapid move off of a bottom. That's not an extended stock right here. So you have to know where you're looking at. We'll talk about squeeze in a minute. If I come down here, the bottom is the kahunas, and a dark blue is 0.4. A light blue, I guess these are lighter blue, are 0.24. Light red is 0.24. Dark red is 0.4. How does this help me? All right, right here. When I see 2 out of 3 days or 2 in a row, that's a good sign. I want to look at that stock. Here was 2 reds in a row. That's a bad sign. So again, it's supporting evidence, and I'm going to put the supporting evidence to real work. Now, I keep looking for Keith, and I haven't seen him say anything, so I'm going to just keep going because I got a few more slides. I really want to regurgitate to you all the signals that I use on my weekend review, because hopefully I'll have other people look at this that aren't here so that they can learn more from what I'm doing. I mean, look at the volume on this stock. This stock has run up. Look at how big the volume has been. This is just a killer stock. Ropel was right. I don't like this pattern, but maybe this mitigates it. More to come on this guy. So pocket pivots, again, I was supposed to show you where they were. Oops. So pocket pivot line for me is right here. Now, a 5-day pocket pivot is light blue, a 10-day is dark blue. For whatever reason, we decided to start looking at bearish pocket pivots. Gil doesn't use them. I don't know if they have any meaning. I don't have them researched. So I really ignore them. I look at the light and the dark blue. So now I start looking for convergence. Here I've got a kahuna, a pocket pivot. We'll talk about a mobile breakout in a second. A new John Person buy signal. Next day I got a weekly bongo flipped. That would have been a nice time to buy this stock, to say nothing about the fact that this day took out the chandelier stop. So there's a method to my madness of what I do here. All right, continuing on. Squeeze, John Carter. I know at least one person here works for him. John Carter is a smart man. He's a really smooth operator. He's probably the world's best salesman. He did not invent the squeeze. He popularized it. He took the Bollinger Bands contracting within the Keltner channel, and then he combined it with a momentum indicator. That is his. That's unique. But the squeeze itself is just that. It's the Bollinger Bands moving within the Keltner channels. It's a period of contracting volatility. And the thing that I like about a squeeze is when the squeeze ends, you often get a big move. Something else I like about the squeeze. Pullbacks in an uptrend. I want a stock that's pulled back, maybe gone sideways for a little bit. Squeeze might help me find something that's pacing as well. So we'll look at squeezes. This is from David Elliott. I called out the green candle low in that chart. A green candle low means that I got the lowest low in 20 days, but I closed higher than I opened, so it's a green candle. David Elliott also passed away a few years back. I got, George Lee also passed away. This is kind of a bad trend. Last year, he used it a lot, but it's a nice reversal candle. The stock's been going down for 20 days in a row, or has been trending down for 20 days, and then it opens down on the day, and then it closes above the open. That could be a reversal. The red candle high, the difference between the red and the green requires to be the highest high in 10 days. Now, back to the chart. I hope I left it open this time. I did. You get a lot of red candle highs when a stock is going up. It just means, well, you got one right here. You had the highest high going back at least 10 days. You see the little topping, the little line. And you close down, so you got a red candle. They're not all going to be meaningful, and but when you see one, or you see the green candle low, which is let's see, where's the green candle? It would be back here, and here's this one didn't do anything. This one here is a doji bar, but it was the lowest low going back far, and it didn't reverse for a couple more days. But they can be a symbol of a reversal. I don't want to put Keltner channels and Bollinger Bands on my charts because they'll start to get muddied up. So who needs to? I put mustard. If it's yellow, it's in a squeeze. Squeeze, it's flat. Yellow, it's a squeeze. Squeeze, it's kind of flat. Yellow, it's a squeeze. Squeeze, it's kind of flat. So if I want to find a squeeze on a stock that just crossed above the 200, above the 50, if I'm looking for something basing, I think the squeeze helps me out. And look at, could it be any better? Here you have a stock, it's in an uptrend, it's really doing well, but it's kind of slowed down the uptrend over here, all right? It actually went into a person sell signal for a couple of days, and then this day happened. You would have seen a squeeze. This arrow says you had a new John person buy signal. This here is the band that just shows you're in a buy or sell. And you had a kahuna, and look at the volume that started coming into Unity. I think all of us would have jumped on this had we seen that signal. So again, constellation of things to help draw my eyes. And I have these in TradeStation, I have these in Thinkorswim. I've moved beyond these as what's in my radar screen, but I can scan for all these signals that I just reviewed with you. And the problem for me is I'm not a day trader. I look at things end of night. It wasn't that important. Many of you have my dots, and what's in my dots? The top dot is a Bible gap up. The second dot's a pocket pivot. Then I have a mobile breakout or breakdown. Then I have a squeeze. Then I have a PSAR dot. And then I have a, can't remember, these are red candle highs and green candle lows. And then I have force, kahuna force. You had to be both positive on force and a kahuna in the same direction. And so I don't need to plot them. My dots, which I always gave out to people at my live seminars, basically just plotted all the Hgsi indicators on my TradeStation in one little band. So I like to watch this stuff in real time because it's how I find stocks to buy. John Carter's squeeze, and it's basically the squeeze that I define that's been in the literature forever. Does he tweak it? I don't know if he tweaks it, but what he does is he puts in a rate of change momentum indicator, and therefore you get the dots, which is when you're in the squeeze they turn red. You have the histogram, which is his momentum. So you look for the dots, and then the histogram helps you understand what direction it's going to go in. And then he has multiple time frames in one product. So he's got and then he's got a pro product that just looks at different calculations, I believe, of the Bollinger Band, so he can get in earlier. So he's really taken it and done a lot with it. I mean, it's gave him his positive reputation. I use it. That says something right there. Talk about my buddy John. John and I went to a rock concert last week. Susan Deshi, Derek Trucks, whatever the name of the band is. This Trucks guy's like the world's best guitarist. He played with the Allman Brothers on tour when he was 13. Of course, I had heard one of their songs. I had no idea where I was going, but it was great. But just my first concert in 2 years. I love concerts. John lives down here. We get together every once in a while. It's not a surprise that his indicators are in HGSI. I only begged for 5 years for that to happen. The ones that I pay attention to, one is the PPS signal. Now the PPS signal has none of the calculations that I use for the bongo. Totally different. Now he won't tell me exactly what's in it, but I think I figured it out. It's another thing that determines momentum change or trend direction change rather. It's fractal, so unlike the bongo, which I use in daily weekly, I can go down, I could probably take the bongo to intraday times, I just never have, but I can use it in any time frame. It paints an arrow in TradeStation. I believe it's an arrow in Thinkorswim, where you actually, it's a standard Thinkorswim indicator. I put it in HGSI as an add-on because of the speed of HGSI and because it helps me. So you can scan for this in HGSI and TOS, and if you want to use it in TradeStation, I think the package is $4,000. I combine it with my other HGSI indicators, and then really the piece de resistance is HCD. So let me tell you what an HCD is, because he tells everybody. He's got it on his website. An HCD is basically, in my opinion, his derivation of a morning star or an evening star. So a morning star to me is, I'm in a downtrend, I gap down today, perhaps and then close where I opened, so I have a gap with a doji. Maybe it's not a doji, but I've got a gap down bar today, and then I gap up tomorrow and have a green bar. And it's that gap down, gap up, that signals to me that it might be a reversal. Now, John's is even cleaner. In John's signal, it says, I've been in a downtrend, you'll have to trust me, I'm in a downtrend here. I have a doji, and then within X bars, he closes above the high of the doji bar. So X is one of these numbers, but here he is closed above the high of the doji bar. So by definition, that's a high closed doji. He had an independent person or company charting platform who looked at all the different candlesticks and all the different signals and basically gave him a report that this was the most accurate signal that they had. Now this is a special one because you have a break of the trend line of unbalanced volume. So you have a volume increase breaking a downtrend, and this blue dot is a John Person PPS signal. So this constellation of signals is very attractive to me. This is probably my go-to signal. So when I do that weekend review, I start with looking at the market, then I look at the top 10 industry groups, and then I look at about 1,000 stocks that come from various scans and lists. I come up with a list of stocks that I'm interested in buying. Then I add them to the weekly high close dojis that occurred on that Friday, because it only occurs on Friday, because it's a weekly. And those are the ones that I do my final picking from. So I don't even pre-screen the weekly high close dojis. They're such good signals. Now, let me jump into HGSI for a second and show you what I've done. Now, this is an add-on. Don't give me heat. It costs extra money. Deal with it. It's still the cheapest product in the market. I get a grand total of 0 if you buy it. I don't care. I think it's worth it to me. I put a little data window here. All right. I don't like to think. I just like colors. I'm like a kindergartner. And look at this. Turns out, lo and behold, that on Unity, it's got a weekly high close doji. Huh. Now it also has a low close daily because of this reversal here. But yeah, I pay less attention to the daily. So I light up a color on the daily chart. So let's just, out of curiosity, let's open up that weekly chart. It will turn into a weekly chart, I promise. And so I would have looked at this on Friday and I would have ignored the signal. The reason I would have ignored the signal is a high closed doji is a signal you get in a downtrend. A low closed doji is what you get in an uptrend. If I get a box tomorrow, okay, I've got to figure out where that went, the annotation. If I get a box tomorrow, that's a big, strong sell signal in my mind. Why? Or if I end the week with this box, because a low closed doji occurs in an uptrend when you have a doji followed by a close below the low of that doji. That would be a strong reversal candle. Now, I just made that candle up. Who knows if we'll get that? It's irrelevant. I don't know if we will, but that's what I would look for. Now, this here doesn't mean a thing to John Person for this signal because that bar is not closed yet. And it could be that we just go straight higher and that closes a green bar. It could be a big red bar. So I don't know anything. It's the middle of the week. But I know when I see that, I pay attention. Now, in TradeStation, I could make my living by this scan right here. And this is a scan that comes with his indicators. And this is looking at high close dojis on the weekly. Now, let's just take a couple of these. Let's take Agilent. So if I go over to this chart, I'm just going to type in an A. Now, he color coordinates this for the chart novices. So let's see. If you got a high close doji, and it's gonna color orange, and you can see you had an orange high close doji. You had a buy signal at trend line support on the weekly. This is a beautiful signal. You're in a squeeze on the daily. This was a great, and it's on my buy list. All right, this was a nice buy. How did I find it? Because it had a high close doji on the weekly. Any bar to the right of that orange is not yet closed because it's a daily, it's not the end of the week. Now, turns out Hgsi is really good at this. Really, really good at this. You could take the keepers list and go up to or down, you'd have to buy the add-on. I'm not here to sell you something, I don't do that. And I could look at, show me the stocks that have an HCD weekly and have had a PPS buy within the last 2 days. And none of the keepers, let's go to all securities. And these are stocks that by scan 45 stocks out of 11,000 that had a weekly high close doji and are in a brand new PPS buy signal. I suspect I could find some good looking charts. Well, this may not be a great looking chart. And it's been in a high close doji for 2 weeks, getting ready to break out. But the reason why this stock got identified was your high close doji, and this week doesn't count, okay? It means within the last X bars in the weekly, you had a doji, and actually this is the one that triggered. So you triggered it today. So it's telling you that before the week is closed, you are potentially have a high close doji and a new PPS buy. This signal will not be fixed until end of day Friday because the weekly bar is not done. In the smart groups that I built for this early on, which if I was good, I would actually update. I'm just so freaking busy. You can look at every day and look at new PPS daily buys. So there are only 25 new buys today. Daily buy near a weekly support. That might be interesting to look at. I mean, look at Home Despot. It had earnings today. Here's your support, breakout. This would be a kind of stock that I buy. It had a Bible gap up, so I know the rules about where I would put my stop. But the whole point of scanning is to make your lives easier. And if you understand the signals, you can design the scan to do what you want. So PPS buys, HCDs, and then the other thing that's in there is the person market catcher, and I'm going to bring that up in a second. So how do I use this stuff? All right. So by far, this is my favorite setup. Now, do they always look like this? You know the answer. No. I mean, this would be your channelingstocks.com back in some of the early days of the 2000s when people had a website and would give you a list of stocks that were channeling. But the basic premise is I'm in a long-term uptrend. I've either pulled back, this would have been all right, or I've gone sideways, back to support, and then I break out. So how might I find these? Weekly bongo, green. Daily bongo could have gone red and turned green. That would be good. It might be green. I bet in most of these I'm in a squeeze. Cool. And then what I'm looking for here? Give me a PPS buy. Give me a kahuna. Give me a mobile breakout, which I forgot to put in here, which is from David Elliott. It's a derivation of Bollinger Bands. Give me a momentum signal in this area, and I want to buy that. That's what I do all day long. Again, flipping back to Hgsi, just to show you that I put my money where my mouth is. Buy watch. And here it is. These are my favorite pullbacks, ready to run. That's where I make my money, and they look like this. That's where I make my money, and I do that every weekend. So, bongo weekly green, daily red or green, price near support. It could be a pivot. It could be a major moving average. It might be where it's based before. I look for a momentum signal is what gives me the clue that I want to buy it. Now in Sager's TradeStation Q tools, he does the math and he gives you a signal breakout or pullback or box reversal. He can actually calculate the whole move. And then optional, if I saw Eurekas, I would know the market was good and I like the squeeze as well. So here's an example. Here's Generac. Now, I'm not going to go back and give you this one here where the arrowhead is. That's where I brought up Generac the first time. May of 2020, and it gapped up on Monday. It was a good one to chase. I don't always say to chase gap ups. I chased it. Now, it doesn't count here as a pullback buy. And so I'm not, because it wasn't in an uptrend. But what got my attention was a mobile breakout from a squeeze, a new John Person buy, and two kahunas in a row. Now, the other thing that got my attention is all these moving averages came together. Mobile breakout, squeeze, no surprise. I want to talk about this one right here, 189. It's trading today. It's down way off the top at 435. That was a year ago. It was at 189 or whatever. Why would this be interesting? Sorry about that. I can't move my, it's interesting because am I in an uptrend? Absolutely. No question about it. Have I pulled back to support? It's not perfect. I didn't get all the way down to the 50, but yeah, I've pulled back. And then I broke through here, which is the green is the 17-day. I had a John Person buy signal, mobile breakout from a squeeze. Notice the daily bongo went red, the weekly bongo was green. And down here, I got a new John Person buy, a pocket pivot, and a kahuna. I'm in. And this red line here is for another day, but that's my chandelier stop. So I'll actually look for stocks that break above their chandelier stop as a buy signal as well. This was something Ian used to talk about, free parking. It's a great place to go when you want to go hike from your whatever. I won't say wife. I go to my office. But all great stocks can come back to the 50 and either stay there for a while or bounce. And it's a really good place to prospect. So This is Micron Technology, 11 of 12 to sometime in March of 14. I tell you the dates because I'm going to reproduce this chart with my signals. Everywhere I put the green arrow on this would have been a pretty good place to consider buying the stock, and I could have gone back here as well. But I don't know what it was doing to the left, so I don't know if it was in an uptrend. Here's my pullback. Couple of opportunities there, pullback, pullback, pullback. And the 50 at free parking, I look at this all the time. Here's the same dates. 11 of 12, 3 of 14. Again, this will be in your PowerPoint. You just tell me how often the kahunas, the pocket pivots, and the person buy signals and the mobile breakout and squeezes lined up with the pullback and bounce off the 50. Why do we make our lives hard? This is so frickin' easy. People joke with me and say, you make it look easy. It is easy. Now, I haven't shown you how to manage money and what to buy, stocks or options. It's a little harder. This is easy. It's colors. I mean, blue and green are good. Red is bad. You buy off support and you can flip everything up and sell off resistance. Another pattern I do is bottom fishing. Now, what I like about this guy here is I have a very excellent place to put my stop. And that excellent place is not an O'Neill 5 to 8% below my entry price. My stop is probably a couple percent. It's just got to be below at least 1 or 2 ATRs below that 50-day moving average or where support is. If I'm buying this because it's bouncing off support, then if it breaks through support, why would I want to be in the stock? It just killed the reason why I bought it. So that's one type of buy. These guys are a lot riskier. This is a downtrend that's going to turn up. And I've made some of my best money in these, but I suspect that I've probably lost money in these too on more than one occasion. So I'm always looking for these. Bottom fishing for nuggets. Typically it's a stock that's got good fundamentals. Something happened, it stubbed its toes, and then something changes. How many times have you heard me say tandem and you wanted to swear at me because you didn't take the trade, you didn't follow me, or you think I'm being cocky? I raised my hand too, but it's the best example I got. So I got a stock in a downtrend. I'm typically looking to short this stock when it moves down, just like the uptrends move up. These are great spots to short. Retrace to resistance and short it. Retrace to resistance and short it. All right. But it just broke through resistance. Now I've got something else here. I got a higher high and I might have a higher low. So I've got a trend change. I'm interested in this. All right. So stocks roll off the old highs. It's likely below the 200-day SMA. Bongos are mixed. I don't know what they're going to be. I got to prove to myself I got a new uptrend. I want higher highs, higher lows. I want to see a break above resistance. In this case, the resistance might have been a moving average. It might have been a trend line. I like pattern confirmation. Do I have a double bottom, a head and shoulders bottom, a fry pan? It's not necessary, but I like it. And boy, this is going long today. I apologize for that. I look for momentum. I really want to buy it on the retest. I want it to break out, pull back, and go. This hasn't pulled back all the way, but if I saw the momentum, I'd probably jump on it. Multiple kahunas in a row after the stock's been clobbered. Oh, I'm ready. I know you hate tandem because I talk about it all the time. I can't even show this in HGSI because it's gone from 2 to 140 and I can't make the chart, so I can only look at like the range of 2 to 20. So here it is in E-Signal. This is my John Person derived like signal here. This is another momentum signal that we haven't talked about. This is the John Carter squeeze where the red dots. Here is the MOBO breakout occurring. This light blue is the kahunas. It's the same stuff, exact same stuff. And this looks like a great stock. It's breaking out. This is what the stock looked like. Talk about bottom fishing. This stock was a $140 stock and it blew up. Now it's back to $140 again. I gave this on April 8th. It's not 1998. What kind of a hello? I was doing it back then, but I don't think I was doing it like this. I gave this out on a video and I gave it out at a live meeting in Orange County. And this was probably the highest return stock. I bought 2 boats and I still got a lot of it, or not a lot, but I still got a fair amount left. The other thing I look for are Darvas boxes. These are the 3. Would PayPal fall in this category today? Yeah, I think it will, and I'm going to show you a scan. I was looking at PayPal earlier. I like these as well. There's 2 buys on this picture. Well, 2 types of buys. The typical buy, when you see a stock that's channeling, the channeling could be sideways, it could be up, it could be down. You buy it at the bottom and you sell it at the top. You buy and you sell, you buy and you sell, you buy and you sell. And then what if it breaks out? Well, it's just like the thing I just showed you. I'll buy it up here as well. What I like about these buys, you know where your stop is. I'll tell you the other thing I like about this. If I'm in this range, why not buy a call at this strike price and sell a call at that strike price, right? Or if this is where I know it's going to reverse, I'll sell a put here and buy a put down here to protect myself and my margin and just collect the premium. So these are also great for option plays. Sideways can be put up or down, can last for months or longer. I prefer buying off support. Again, I would look for the momentum signals to come in on this. And as I showed you, it's a good place for spreads. Here is the Russell, and I could have probably drawn another box. What makes me so excited about the Russell right now, it's been in a sideways box since February. And we broke out of that box, and I think we're still holding. And this is a picture, so I'll look at it later. So Darvas boxes, if you know you're in one, buy, easy buy, and then look at all the sell signals on the top. You just have to know you're in it, and it's actually a pretty safe trade. Now, everything I just showed you can be turned upside down and used for shorting. So I'm not going to go through those today. Yeah, I took total advantage of Keith's wrestling event. We continue. Divergences. I don't have great trust in my scanners for divergence, but I trust my eyes. Here we're back to Unity. And let me actually open up the chart because I think it'll show better. So let's go to Unity. And I don't have my PMC, so let me switch it to this one. Notice that I've now eliminated the daily bongo, and I did that because, well, I just did that. I've added now person market catcher. Again, this is something you have to own the add-on. Okay, so get my dates back and look at the chart when I was looking at, because there's probably multiple opportunities. All right, so the buy signal occurs down here. Yeah, okay. So right here was one opportunity. Here's a better opportunity to get in. I think we already looked at it. Took out the chandelier stop, had a kahuna, just had a pocket pivot, it's in a person buy signal. But let's go back here. It's not as good of a buy signal, and it probably didn't work. You may have gotten stopped out, but I want to go right here. And the reason why I want to go here is I'm in a squeeze, and you can pick your day, all right? So on this day here, you would have gotten on your scans a mobile breakout from a squeeze, a bar that bounced on the 50, and it should have perked up your interest. what perked up my interest was this thing's gone sideways at best, and look at the person market catcher. It's gotten less and less negative. And I go further to the left. Let me go to the right. I mean, I don't know which stock, but you can see that it's got a bullish divergence or convergence, as John likes to call it. He hates bullish divergence. So I look at person market catcher mostly for divergences. You can use MACD and other things. And I'll tell you, once I get something that I spot, I love to wait for it to buy when it crosses above its chandelier. I just love it. Now, I had a question about PayPal, and the only reason why I looked at PayPal, I'll show you in a second. So PayPal, yeah, all right, this is a bottom fish. So, a lot of these fail. Now, this here is actually the 500-day moving average. So it's probably just a coincidence that PayPal stopped at the 500-day moving average. I would say it's probably too early to be chasing it, but if you want to put your stops down here and you're willing to risk that much, I'd rather be looking for it when it takes out the chandelier stop. And the reason for that is this has a high risk of failure. But the reason why I knew this was probably going to work was because of Sager. And he's on this call, at least he was when I looked before. He's got this scan called Price at Extreme Low and Reversing PayPal. And he's got a bunch of oversold, stretched, things are going to bounce, these green things here. He had a reversal up here today. So yeah, this is getting ready. Is it early? Remember I said these things are high risk. You just got to set your stops and be careful. Now I'm playing BABA for the same move. The reason I like BABA better was trendline support here. So this is a great scan. Scanning is my friend. So, all right, let me close this. So I find divergence is helpful. The original chart I used, which is the older chart, I just took every indicator and I wrote what it is. So at your own heart's content, you can look at the handout and follow that. Now, I'm not going to spend time, but there's lots of other patterns, more traditional patterns. But is this not a pullback in an uptrend? And the difference is you're buying it when it breaks off the flat wedge. Early buys here more prone to failure. Is a pennant not a pullback in an uptrend? Is a symmetrical triangle not a complex pullback in an uptrend? Here's a double bottom. It's the same trades over and over again. So just for completeness, that. Now, I just wanted to mention Dr. K. He's going to end up doing it next month. So I'm going to push everybody back a month. He's got some great indicators. I use them. And let me tell you the best indicator he has. It's this guy right here. It's his seasonality indicator. Is it any better than seasonaltrader.com and the other 1,000 seasonality programs out there? Probably not. But why do I like it? I like it for two things. There should be there's no seasonal signals here. I have a possibility, darn it, where is it? All right, hold on a sec. Well, there is a seasonal strong or weak indicator, and I think it's right here. So this tells me that Netflix, the fact that it's one, that it's got more than an 8% move, and there's 3 periods, 20, 40, 60 days that I've got set up. What's really cool is it's actually plotting for me the expected return from where we are today. So I can look months in advance, and it's telling me, including my favorite January Netflix paying your bills for the year trade. That to me is his number one indicator. He's got this Laguerre RSI, which I also use, and it's not the Laguerre RSI that's that exciting. It's the signals that he can do from a scanning perspective and Market Watch or Radar Screen and Trade Station. And is another momentum indicator when it breaks above or below the bands. Now he gave an offer, it's a high priced offer. Now I actually own all these and spent a lot more. So I emailed him and said, you know, Keith, this is probably gonna be pricey for my audience, but this will be in the handout as well as a link. I know some people on this use these indicators and find them valuable, and someone sent me a very nice email after the last club. I don't get a penny. It's your business, not mine. He will be demoing tomorrow. Go to his website, look at his YouTube videos. He'll give you a special deal because you work with me, because you watch my videos. And it's just the relationship I have with him. I don't ask for any kind of referral fees. I don't want your money, and he'll give you a bigger discount than he would normally. So he packaged it all. It's actually quite a good deal when you add up what it's worth. You just have to make your own decision. He'll be on next week going through this. Wealth charts, this is a new platform. I'm mentioning it today because you've got to be my team and my army. And what do I mean by that? I recommend you go buy this, all right? And there's a learning curve to it, but this platform is amazing. I learn more every day. And why do I want you to buy it? Because every time one of you says, I heard about this from Jeff Scott, I'm closer to having them put all these indicators in, except for John Persons and Dr. K's, because they're proprietary, because I have enough people that work with me that are using the program. What I recommend you do is it's tomorrow night. I made a tiny URL so it's easier instead of the long URL. Tiny URL, wall charts, Scott. That's the link. I will put that in the mail out. I'll be watching. I learn every time I watch. Don't buy it unless you buy it from one of his programs. It's $297 a month, but whenever he does this event or his Wealth 365, it's $997 and for the whole year. It interfaces with Tastyworks and a couple of futures. And if you're watching this from overseas, he's got a bunch of international exchanges as well. So let's go look at a couple of charts and let me answer questions. That took longer than I expected. I know that was kind of didactic and not interactive, and that might not be what you want or what I want these to become. But I thought it's been a long time. So, since I've done that, does Hgsi have scanners of all those setups? It does. So, for example, let's go to all securities, and I hit warehouse, and now I have 11,514 stocks. I'm not looking at that many charts. Now, if you have the John Person indicator set, you should have these scans. If not, I've got to post them. But let me do, actually, you may not, pullbacks in an uptrend. So I want to find stocks that are in an uptrend near free parking. I could find them that have within 2% of free parking. And I've got 480. So if I look at one of these just blind, and I'm not saying it's something you want to buy, I want to buy, I'm just looking at it, it should be within 2% of its 50-day moving average. Well, 675, whatever, 625, 635. Obviously, this is some kind of a bond thing, maybe, I don't know. It's not something that I'm buying, but the purpose of this scan was for me to find stocks that are within 2%. Well, that's not enough. So how about within 2%, free parking, and some momentum? So I think this requires a mobile breakout. So let's look at, looks like a new name. So here's a stock that has a Bible gap up, a squeeze, a new person signal, and a kahuna. Now, we don't care about this because it's got no chart pattern. God knows what it is. I have developed scans. I've put price in, 2% of free parking, and then this is one that requires a squeeze and a momentum indicator. Let's rank it by raw combo, which means the best will come to the top. And then I did it backwards, so do it that way. Okay. think, nope, I did it the right way the first time. All right. So I got the best at the top. I haven't filtered for things that I wouldn't want. Let's just look at what I have. All right, so if I skinny this down so I can see more, clearly the stock has been in an uptrend. Now it has, and this is now giving me a little bit over a year. I typically like to look at a year. So it's not what I would call tight. I liked it like much better in this run up here, but I'm looking at it, and what do I see? I see it's within 2% of the 50. It hit the 50 today. It's got a mobile breakout from a squeeze, a new John Person buy signal. It's got 2 pocket pivots in a row and 2 kahunas in the last 3 days. Yeah, that's a nice look. I like this stock. Now, this here is a PSAR, the Wells Wilder. So I know that there are his minions out there that follow his trading system. And you guys, I love the questions. I'm trying to get to all of them. Keep asking them because some of them are very basic, but if you don't know the answer, you're missing out on the power. But these dots here, the red dots there, the green dots here, it's just a trading system. So I would look at this stock and I might actually trade this stock. I hit here, I bring up all the data. I put my on this bar. So the close was at 116.64. The high was at 116.98. I'm a buy high to go higher. I always put my buy stop above the high of the day unless there was a long wick, and I don't want to do that. I look at where that PSAR dot is. It's at 118.03. Now, if I wanted to be safe, okay, I would set my buy price at 118.05, which is, it's only 1.5% higher. And I would set my sell stop below the lowest of the last 4 bars is one option. So that's, I'm looking here, 113.9. It's going to be this bar here, which is 110. So 118 buy, 110-ish stop. So I'm risking $8. It's about 7.5%, 8%. That would fit my parameters. That would be a trade I would consider taking. Now, what I probably would do, to be honest, is I wouldn't take that stop. I'm going to look at this, say, you know, if it goes much below that 50, I don't want to be in. So I'm going to go back here, find my 50-day, which is at 115.82. So I'll probably, instead of putting my stop at the one, actually I got to move over here. The 50 was at 115.26. I bet I put my stop at 113, right below the 17-day moving average. Put my buy stop above the red dot at about 118. So I'm risking $5, so 4.5%, 5%, well within my comfort range. If the market rolls over tomorrow, what do you think the stock's going to do? It ain't going up. And if it goes up, it's a really strong stock. So I don't really want to be in this stock if it doesn't trade up. So the way I look at it, it could do one of about 5 things tomorrow. Market could implode. I don't get filled. All right, that's one option. It does nothing. So it goes up and down and up and down. Do I want to be in that stock? Nope, hasn't done anything. What I wanted to do is I want to do this or over the next couple of days and trigger my stop. And I'll give up this little delta here for the fact that I don't have to worry about getting stopped into, I don't have to worry about getting stopped, you know, dropping at open. Now, the thing I hate is when I do that and then it does this. But hey, that's why you have stops. So actually, TransUnion looks good. What's the next one look like? Now, let me show you something I don't like about HGSI. Sometimes if you hit it double, you'll list in the order you have. Sometimes there'll be an alphabetical order. I want to go down the order of strength. Next one, XPEL. Similar. It's had a deeper pullback than I like, but hey, I like it. Same things. This is your chandelier stop. I'm probably going to look at a stop above that just because of my experience. That's a much higher likelihood of winning play. Maybe I buy half above the high, the other half there. Mobile breakout from a squeeze, right at the 50-day moving average, a person buy signal, and 2 kahunas. What's not to love? By the way, this, if you're not using this, you have your fundamentals here. This has not been a year that fundamentals have been that important. And if you watch what I do with Edge Rater every week, you'll see that oh, I couldn't see the chart during that commentary. Oh God, I hope I didn't screw things up. I'll get that link going in a second. So this one looks interesting. What about the next one? Agilent, this was one of my favorite stocks today. I already showed it to you. Right at the 50. Person market catcher is getting better. Relative strength is coming in. Weekly uptrend. I love, this is a great chart. Bongo Weekly hasn't changed yet. That doesn't surprise me. So how good is it when everyone here looks interesting? Aventor. Close. I'd wait till it broke above the 50 in this, but all I'm asking for with this scan is 2% of the 50. The uptrend means you're above, the 50 is above the 200 and prices above the 200. And mobile break, and I got my squeeze and my momentum indicators. So I have built, and I'm nothing compared to Ron Brown. This program is so powerful because of these scans. Every one of these looks interesting. Now, I guess the answer about the extra charts, yeah. Flaw in HGSI, in my opinion, is I got to build this every time I open it. But the nice thing is they have memory. So if I open up, I hit designer, it's going to open up in the right spot. Let's say I want also, let's say I just want my, let's look at, the ones I looked at over the weekend, my buy watch list of pullbacks ready to run. I hit the watch list, it's going to open up here, and it's going to have that list of stocks in. Pullbacks ready to run. Again, maybe a flaw, maybe by design. If I open something up in a warehouse view, it may not, I have to usually reset it. So none of these stocks in this group today, it's only 20 some stocks met this. On the weekend, several did. Let me just, I just want to have something there. So let me go to the all securities. Now I double click on something, a SPAC, of course, that wasn't, and I open up a chart. Now I would prefer this opens up as a daily chart, but it opens up as my weekly chart. That I may be doing something wrong. And then if I want a second chart, I go to new HGSI charting window. Since I've already had one open in this setup, it's good. Here it is. It opens up in the same spot at the right size. Now you have to be careful and make sure if they're not working together, you have to have linked multiple chart windows. I could have 3, 4, 5, 6 of the same security. As long as I have that, it would work. The wealth charts link. So let me spend a couple seconds on wealth charts. Again, oh, thank you, whoever put that in, Mike. Thank you, thank you, thank you. So it's in there. I get nothing. And again, I say this all the time for a reason. This business of educators who want to sell you something is a dirty business. I take my list, which I never would do, and I go to somebody and say, Dr. Wade, Dr. Keith, you go ahead and you present to my folks, and then I get 50% of every dollar you collect. I have no interest in that. So I don't take a penny. Yeah, so basically I complained to him one day, Rob, you have no top-down tools. So next thing I know, we built a top-down tool. So this is wealth charts. It's got charting modules. This is his way of looking at the market. So let's say I want to look at He has this thing called algo score. He won't tell you what goes into it. I'll typically look at a weekly algo and I'll look at what are the top things with the weekly algo. I might look at the top things by daily algo, or I'm stuck with the what had the best move today. So consumer cyclicals was the only thing that was up today. It's up today, it's up on the week, it's up on the month, and its algo score is kind of in the middle. I want to look at cyclicals, so I'm going to punch that one, I'm going to compare. And so he built this because I'm sure he didn't do it for me, but I called him out on it. And next thing I know, he told me he was going to build it, and he did. I can look at within this, the best change today was in home building. So I might click on that, show me those. And then now I can start to look at stocks and whether I want to look at their algo score as to what's meeting his criteria, percent change, whatever I want to do. It's a way of going through this. Now, he's got a thing called Wealth Scanner, and it's all about his algos. And you can pick what your market is, and it will bring up to the top, if you're looking for bullish stocks, the highest rated stocks in his system. And you have charting platforms in it. You can scan various other scans. Go No Go is one that he gives for free. It's a proprietary system. Cloud Scanner, somebody asked, is yes, it's the Ichimoku, it's Hubert Center stuff. So he comes with some scanners. Now, there's a lot of stuff that's not free. So let's go to add an indicator. So you get a bunch of standard indicators here, and they're the usual subjects. Some of them may have names that you haven't heard of before, Bianchi, Brian Shannon, the advanced, the VWAP. So a lot of educators, as a teaser, have put in their own indicators. So you can get free ones. Then there's some premium indicators which come with the program as well. I think these come, are these just the ones I paid? No, these come with the program, like the Go No Go trend, which is this thing, is a free indicator that comes with the program. Then, the way they make their money is lots of different educators. And I'm hoping to have a premium indicator, say Jeff Scott and Friends, where it's free, and all the indicators I use. And I've talked with him, and he's told me that he's going to do that. I just don't know when. But these are some of the various people that have created indicators that go in there, and it keeps growing. So there's a lot of interesting charting tools, the scanning tools. Now, let's say you're an options person, and let's say you're paying somebody money for an unusual options tool. I did. You don't have to be afraid to admit it. Turns out you don't need to. So he's got, these are all, if you're seeing it, unless it says something different, these are all part of the program. So he's got things that can look at unusual activity. You can look at various option algorithms to help you find what you want. Highly unusual, unusual, things that have a lot of volume. You might want to look for things that are expiring soon, hot money, all kinds of different scans that come with it, free, part of the program. The only stockbroker that he has today is Tasty Trade. And Tasty Trade, you just put in nominal amount of money, and it's Tasty Works. Same thing. I'm already connected, so it probably won't connect me. Yes. Oops, I want to hit that. So Tasty Works will give you real-time data. Even if you don't have it, you will get BATS, which is real-time, but it's not as fast as the Tasty Works. They have some futures. Best thing to do is to put a little money into one of the two futures brokers if you want them. It's, unlike Hgsi, you can do time frames, 5-minute time frames, and whatever time frames you want. So that's built into the program. the ITP indicator set somebody commented on. I bought it. I'm still learning. I believe tomorrow is going to be about the ITP set, and I think it'll be about wealth charts as well. You know, when I watch what he does, and since I know where I think I know what John's person's indicators are, there's a lot of overlap on these different folks, which means they steal from other people. I know that because if you've been around long enough, you'll find out how many people sell you the squeeze. And we know that you can make it yourself. So I think this is a great platform. I'm just touching the surface, but for $9.97, I was paying some guy $149 a month for the unusual options. So I saved 150 bucks a month immediately. You won't be able to do that on HGSI. There's no options, and you don't have to. You don't have to. You don't have that data feeds. You don't have the intraday in HGSI. So a couple of questions. Have you switched to Tastyworks for broker? No. Why bother? I mean, have you ever seen how many indicators I bought for TradeStation and Thinkorswim? No frickin' way. So I put $5 grand in there, and if there's a trade that I have to take, I'll take it. But I'm married to what I use, whether it's, you know, Sager stuff, whether it's John Person stuff, or what most of these charts are is the be your own guru. Combine whatever you want to combine, make it yours. I don't have a brand. I can do whatever I want. ITP I think is good. Yes, you can use some of your data source. So you can use, it comes with BATS, which gives you futures, Forex, US stocks. He's got delayed of Canadian stocks, Eon stocks, and a lot of different things that come with the 997 per year. The options 990 is in the 997. Let's say you're the opposite of me and you're a fundamentalist. Well, you probably wouldn't be on this call if you're a fundamentalist, but he actually has this dashboard, which is the, it's actually pretty cool, Fund Hunter. And so you can look at, you want to find FDA news, buybacks, social mentions, insider buying or selling, high short interest. Well, I could care less on fundamentals on anything short of a daily time frame. So I might kill them. And then, you know, he's basically, the system is going to be scanning here's the NASDAQ 100. And when you start to see green lights, I mean, you're starting to see, and I probably would want to look at it on the daily, things that are having something positive coming in here, insider buying on Amazon. Well, that's kind of interesting. Boy, talk about another Darvis box. So there's so much in this program. It's an amazing program. You know, the reason why I may not post this on HGSI is I don't want to piss off George, and I don't want people to think that I'm not an HGSI guy. I'm an HGSI guy. I can't do what I just did in wealth charts today. And even if he puts all my indicators in, I still can't. But the guy, you know, Rob is got more energy than I. If this was his program, he'd be talking to midnight until the last person said goodbye. There's a lot of smart people out there. Dr. Wade's stuff is good, okay? It's very good. And next month, he'll talk. I'll ask Sager to talk the next month after that. And I would like Sager, who's on this call, whose stuff is outstanding, whether it's his Q Edge and Vital or his indicator set for TradeStation or Metastock. There are some indicators, like if I'll go into my TradeStation, and you know, I got to tell you one thing though that is amazing me. I've got Zoom running. I've got Snagit taping this in 4K. I've got 2 instances of Thinkorswim running. I've got TradeStation running. I've got HGSI running. I've got my Outlook. I've got wealth charts, and I've got my my Google based windows open as well. And my computer hasn't even slowed down. I mean, this is amazing. Do I use Options Pro? Yes, for a different thing. I use Options Pro for certain scans, and I use Options Pro for the modeling. Do I need it anymore? No, I just like it. But I do use Options Pro as another tool. Say your stuff, and you know, I'm so impressed with his stuff. Is remember I said it doesn't just give you a signal, it gives you a whole move. So instead of just saying I've got a kahuna, he has an algorithm for determining a pullback. So if we look at Aspen, I gotta make sure I get the color is all the same. Let's make it green. I'll make this green and I'll make this green. I'll try if I can actually. So I know that Aspen pulled back. So what is that going to tell me? I have a stock that's pulled back and had a bullish reversal signal today. Is this something I want to buy here? Probably not. I don't like this. I got a trend line resistance above it. A break above that will show up tomorrow as a breakout. Well, it hasn't done it yet, but had a lot of breakdowns today and some breakouts. But let's look at Autodesk. And I haven't pre-screened these. I'm not that smart. Broke above its trend line today. So he actually gives you a signal. So this is a complex. So Randy, if that's in wealth charts, maybe I can get rid of Options Pro, the spread tool. I haven't looked at that. All right, well, that would be awesome. So Randy was talking about, I think, a new tool in wealth charts. The thing changes every day. Sager is a math guy. So he's been able to code things so what's a bounce? Well, I know that this came down to support and bounced. So let's look. CG, Carlyle Group, it's been a good player. Let's look at the daily. Hard to see, but it came down here and it bounced. All right. So very complex signals. I might find something like CG didn't do it, AMP didn't do it. Some that'll have multiple signals in the same direction. And then my favorite thing is probably this guy, the go with flows. Because if I want the go with flow, again, my interpretation is not going to be as eloquent and as accurate as Sager, but it's a signal that tells you have a trend change. All right. Now, here you went from a neutral candle to a bearish candle. You can see from bullish to bearish and vice versa. So if I go back to Agilent, so Agilent today has a new blue bar. It's a bullish candle and a bullish color, and it happened today. So I got a new signal on the go with flow. So what Sager does blows my mind. And if I ever, it's an Options Pro figures. If I ever could figure out the math, I would be shocked. But I would love, if we could get some of these signals in HGSI, even as a paid add-on, I think it would be great. When I've talked to Sager before, it's been a concern that the data source isn't adequate. The other tools require metastock, which I'm not going to try and make you go buy something for $1,000 more. I'd rather buy the wealth charts. Now, I'd like to see Sager stuff in that, but again, I don't know if the data will support it. I've tried to answer the questions that have come in. You remember on my slides, when I do my weekend review, I always talk about be your own guru. And that's what you need to do. Don't do what I do. Do what works for you. Now, hopefully tonight, you got a few tidbits of things that work for me that might resonate with you. And maybe tonight you just found something you can add to your armamentum. Whether it's Wheatley with his MACD divergence, whether it's TG with his Moxie, whether it's Dr. K, whether it's the stuff I showed you from Ian or David Elliott, whether it's John Carter's tool sets. Find what works for you and just get good with it. You don't have to change all the time. I use the same stuff over and over and over and over again. I'll bug him on that. I like that. Overpriced options near earnings. Sierra charts, I should give you $1 because Ahmed, you actually picked one thing I don't own. It's hard to find things that I don't have. So I wanted to go more into charts today, but I think I accomplished what I wanted, and it's about an hour and 50 minutes in. So I will post this, I will post the links. I hope you all learn from this. I learned from it too. Um, it's not a sprint, it's a marathon. And, you live for tomorrow, you manage your money, you don't blow up your account. You all have a great holiday season. I'm traveling the next 2 weekends. I'll try and post. Those who've been around for a while know I always end up posting, even though I say I might not. And thank you all for being here. Good night.